Welcome back. We've seen a bit of a slip from the high point of today's trading session, and that's nothing really to worry about. It's still holding with a gain of almost 230 points on the Nifty. We've given up on that 18,100 mark, and that's an interesting one, primarily because this morning, the option setup indicated that 17,900 to 18,100 is what the street is eyeing as the range for the market. But today, the way the market's moved higher, a large part of the credit goes to the Nifty IT index as well as Reliance. Both of them together have contributed maximum to the gains in today's trading session, and both those indices up around, Reliance is up 2% and the IT index up around 2.5%. The Nifty Bank is something that I'm watching out for very closely, and that's primarily because if any up move was to happen, it has to be now from here led by the Nifty Bank, and the Nifty Bank currently is at an important resistance zone. 42,632 is where the Nifty Bank is, and 42,665 is where the 50-day moving average of the Nifty Bank is. Once it crosses that, then the path opens all the way up to the 43,000 mark, which is the 20-day moving average for the Nifty Bank. A lot of calls were written on Friday's trading session, and a lot of them have come undone now. So if you just take a look at the way the 17,900 call has panned out, or the 18,000 call on the Nifty, 17,900 call, 35 lakh shares unwound out there for a premium of 250 odd rupees. 18,000 call as well, had a fair amount of writing, and now that's coming in for a bit of short covering. 18,100 is the mark that I'm keeping on an eye out on, and that's primarily because we still have around 64 lakh shares in open interest out there. If the market sustains above that 18,100, 150 mark for a long time, then these guys will also have to run for cover. On the other side, the put writers have gotten some confidence, so they are writing the 18,000 put on the market, and they are also writing the 18,100 put. The 18,000 put has a premium of close to around 42 rupees, telling you that 79.50 would be a bit of a support. 18,100 put too has come into the picture right now with about 70 lakh shares outstanding, 75 rupees. So that's telling you levels between 17,950 to 1825 could see some bit of a support. On the way up, however, the Nifty runs the risk of getting into a few resistance marks. 20-day moving average 18,200 and the 50-day moving average 18,300. And in the past, we've seen the Nifty hit a wall around that 18,250 mark. So those are a bunch of numbers that we will watch out for the Nifty Bank. That's about the market F&O and technical setup.
Okay, all right. So let's do one thing. Let's take this forward and get in Ruchi Jain of 5paisa.com to tell us more about the charts and what they're suggesting as far as the F&O setup is concerned. Ruchi, good afternoon. Well, slightly off the highs, but it continues to be a strong day for the Indian markets. What do you suggest? What could the next level to watch out for on the Nifty be?
Yeah, hi, very good afternoon. I think on the downside, the price-wise corrective is over for our markets. Because if you look at data, then primarily, as I said, formed fresh short formation to which our markets had seen that correction. But in last couple of trading sessions, we have not seen any fresh shorts coming in. If you look at last week's data, then on Wednesday's session, FIs had about 94,000 or 95,000 contracts on the short side, and on Friday's closing, their net short contracts were around 83,000 contracts. So in spite of that market correction in last two trading sessions, they have not formed any fresh short positions. The long-short ratio, although remains around 40%, but it's good thing that they have not formed any shorts in last two sessions. Technically, we were around that 50% retracement mark of the previous up move on the Nifty on Friday. And considering this price up move in today's trading session, I think the price-wise corrective phase is now behind us, and we would head higher in the January series from here on. So we are advising our clients to take a buy on dip approach. Any intraday dip towards that 18,050, 18,000 range should be a good opportunity to create fresh longs, as call writers would be in a hurry to square off their positions in that range. And on the high side, the 50% retracement of this entire 1,000 points correction which we have seen recently would come in around 18,330, and 61.8% would come around 18,460. So these are the levels that we would watch out in the January series. But for now, I think the biasness continues to remain positive as the data is not negative and the technical chart structure has turned optimistic.
And individual stocks, how would you play this?
So a couple of recommendations on the buy side. Reliance is taking the leadership, and the way a chart structure is shaped, we have seen that oversold zones from where positive crossovers are there. The price volume action is indicating possibility of an leadership coming in for Reliance in the next few days. So Reliance can be bought around 25.70, 25.75 on minor dips with stop loss below 25.20 for targets around 26.54, which would be 61.8% retracement of the recent correction. And L&T Finance Holding would be my second stock pick, where the structure is quite good. The weekly chart structure indicates that the recent correction was just a pullback move after the breakout. So one can go long on L&T Finance. with stop below 86 for probable targets around 98.
Yeah, all right. Thank you so much for joining us. So that's some technical ideas which are coming in. For now, we'll slip into a break now. On the other side, we'll get you details on the stocks which are buzzing on the back of their Q3 business updates and also an insight on the life insurance data for the month of December. Stay tuned.